What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be going over Anheuser Busch Stock and the recent purchase from Bill Gates into this company. I want to take a look at their earnings. I want to go over the position that Bill Gates built out. I also want to take a look at their revenue, EPS, outstanding shares, and then leave off the video by taking a look at Bill Gates' portfolio in total and what other stocks I think are actually more interesting in his portfolio than Anheuser Busch. So if you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at their stock chart. If we look at the last 5 days, we can see that the stock is down 1.21%, which is actually a little bit surprising because oftentimes when super investors buy into a company, you'll see a lot of new investors become interested in the stock and really bring up the stock price. Here, we don't really see that with Bill Gates buying in. However, if we look year to date, the stock has gone on a very interesting ride. We can see that early in the year, the stock actually spiked up to around $66. However, they pushed out this marketing campaign that was very controversial, and the stock dropped almost 20% to its lows of the year of around $53. If we look at the last year, we could see that Anheuser Busch is up almost 13%. However, over the last 5 years, this company is down almost 40%. And if we look at the max chart, we can see that from 2009 to around 2016, the company went on a massive tear where the stock price got all the way up to $130. However, since then, things have not been the same, and we have seen this stock fall almost 60%. And the interesting news that came out around Anheuser Busch this week is that Bill Gates bought over 1.7 million shares of the company. These 1.7 million shares are currently valued at $95 million. And this is a bet by Bill Gates that the company will rebound after this devastating campaign that they had in May, where the stock price dropped 20%. They also saw a 10.5% decline in US sales during this time period. One thing to keep in mind is this was a US based marketing campaign, and Anheuser Busch is a global company. If we look at where the revenue comes from, we could see that only 27% of their EBITDA comes from North America. 33% actually comes from Central America, another 17% from South America. From Asia, they're getting around 10%, and then Europe makes up 12%. So yes, that 10.5% is a significant number. However, it is only 10.5% of 30% of their EBITDA. And we can see that most of their growth is actually coming from Central and South America. They're getting organic revenue growth of 10.2% in Central America and 23.8% in South America. And when we look at their Q2 earnings, we don't see a whole lot of negativity reflected. We could see that EPS was expected to come in at 69 cents. They actually reported 72 cents, which was a 4% beat. If we look at revenue, they were expected to report $15.41 billion. They actually reported 15.12, which was less than a 2% miss. Here we have Anheuser Busch's revenue graph. And if we look back in 2018, they were bringing in around $56.6 billion in trailing 12-month revenue. If we look currently, the company is bringing in only $59 billion in trailing 12-month revenue. So over the last 5 years, we have seen hardly any growth in revenue numbers. We've actually seen the revenue dip all the way down at one point to $46.8 billion before rebounding back up to where it's at now of $59 billion. And over the last year, we've only seen revenue grow around 2.2%. And over the last couple quarters, it's all been single-digit revenue growth. And their EPS is actually even more concerning. We can see that currently they're bringing in around $3.05. If we look back in 2015, they were bringing in $6.07, and their EPS has been all over the place since then. At one point, it dropped all the way down to 71 cents of trailing 12-month EPS. It then spiked all the way back up to $4.74. Then they saw the business drop into a negative EPS number of 46 cents back in 2020, and from there, it's rebounded slightly back up to where it's sitting at now, $3.05. And we can look and see what analysts expect over the next couple of years. So for the current year, they have an average EPS number of $3.13, a low number of $3.05, and a high estimate of $3.29. For 2024, those numbers have a little bit of growth to them, but the average estimate comes in at $3.72, the low estimate at $3.45, and the high estimate of $3.99. And based off those EPS numbers, currently the forward P ratio is sitting at 15.75. And I ran the numbers for myself, and we could see that the 2023 numbers, they're trading anywhere from a 17 to an 18.5. If we look at 2024, we can see that they're trading anywhere from a 14 to around a 16 forward P ratio. In my opinion, for a company like Anheuser Busch, a P ratio of around 15 to 16 is maybe a fair value to even a high valuation. When we're talking about a company that has very little revenue growth and their EPS is all over the place, I would almost expect them to trade anywhere from a 12 to maybe 15 forward P ratio. Also, Anheuser-Busch's shares outstanding have been increasing steadily over the last few years. It's really only 1 to 2%, but this does speak to the fact that they aren't spending money on buying back their own shares right now. One thing to keep in mind is that Anheuser-Busch makes up a very small portion of Bill Gates' portfolio. We could see that it is currently less than 1% of his total portfolio value. When we look at Bill Gates' portfolio, I like a lot of his companies, especially the top 5 or 6, because they're relatively safe companies. We can see that he has Berkshire Hathaway at around 20% of the portfolio, Microsoft at 31%, Canadian National Railway at 15%, and then Waste Management sitting here at around 14.5%. So personally, when I look at a company like Anheuser-Busch that has very slow revenue growth, inconsistent EPS numbers, and they're not buying back any of their shares, I am not very interested in the company. I think if we start seeing them turn a corner where they get back to maybe double-digit revenue growth, they can see their EPS consistently get back up to maybe the $5 to $6 range, and they start buying back some of their shares, that would be very interesting to me. They do offer a small dividend, which I think is a positive. However, in my opinion, for a company like Anheuser-Busch, they should have a dividend yield of anywhere from 2 to 3%, and right now they're sitting around 1 to 1.5%. I think Bill Gates is more going for a recovery play on this and maybe more of a short-term trade than a long-term trend of a company that has consistent revenue growth, EPS growth, and is really a long-term hold for him. But that is just my opinion, and one thing to always keep in mind, even with these super investors, do not buy a company just because they bought into it. Make sure you are doing your own research and looking into companies that you like for the long term and are within your circle of competence and also meet your time horizon and your risk tolerance. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.